Hey everyone, welcome back to the Crypto Deep Dive. I'm Laurie, and as always, I'm joined by Nick, the man who eats blockchain analysis for breakfast. Nick, how's it going?
Doing great, Laurie, especially with everything that's been unfolding in the XRP world over the past week. There's a lot to unpack in this episode. ETFs, prices, stablecoins, you name it.
Right? And talking about unfolding, we had quite some drops unfolding today after President Trump went on another tariff rant, this time again against the European Union, and also Apple did come under attack.
Oh yeah, same crap, different day. Threats of 50% tariffs on goods coming into the United States from the European Union, and 25% tax, at least on iPhones not manufactured in the US, and he later even expanded that to other phones as well.
So here's the outfall on Friday, 23rd of May, 2025. Everything is down. Well, Bitcoin is down to 108,090 US dollars, Ethereum is sitting at about $2,536, and XRP is at 2.3197. We've got XLM at just under 29 cents, Sol is at just under $176, and ADA is down to just under 76 cents.
That's not pretty today. But Laurie, do you know what's beautiful? When our listeners subscribe, hit the notification bell and leave us a comment. We do love that. Please, guys, do us the honors if you get use out of our little chats.
Yeah, so much movement, yet XRP's price hasn't exactly reflected the buzz. Well, the buzz before today's downer. But before we dive into that, let's start with what I think is probably the biggest headline, the launch of the first US-based XRP Futures ETF. So Nick, this ETF launched on May 22nd under the ticker XRPI, the first ever non-leveraged XRP Futures ETF in the US. What makes this such a milestone?
It's huge, Laurie. This isn't just about another crypto ETF. This signals that XRP is gaining serious legitimacy in traditional finance circles. We're talking about an institutional-grade product listed on NASDAQ. It invests at least 80% in XRP futures and XRP-linked financial products, which means big money players now have a more regulated pathway to XRP exposure.
Does this mean XRP is finally going mainstream?
In a way, yes. Think of this as a bridge. Institutions are generally cautious with crypto, especially XRP given its regulatory history. But now, with a futures ETF, it lowers the perceived risk. It also sets a precedent. Futures ETFs usually come before spot ETFs, just like we saw with Bitcoin.
Okay, but let's talk impact. Will this help or hurt XRP's price in the short term?
Great question. Futures ETFs often introduce more volatility. They're derivative-based, so they can amplify swings rather than stabilize prices. But they also increase liquidity, which is a long-term positive. Interestingly, there's already talk of a 2x leverage version in the works that'll crank the risk and reward up even more.
So is this just another speculative Wall Street tool, or is it truly a game changer for XRP?
Honestly, a bit of both. It's a speculative instrument, sure, but the fact that we're talking about XRP in the same breath as mainstream ETFs, that's a game changer in terms of perception and access.
Let's dig deeper into how this futures ETF might actually affect XRP's price. We've seen Bitcoin and Ethereum ETFs create some interesting market dynamics.
Right, and there's a pattern worth noting here. With futures-based ETFs, we typically see an initial price pump followed by what traders call the sell the news effect. This happened with Bitcoin's futures ETF launch in 2021.
So you're saying we might see some short-term volatility that doesn't necessarily translate to sustained growth?
Exactly. Futures contracts have a unique market influence. They can create what's called contango, where futures prices are higher than spot prices, which can actually put downward pressure on XRP as contracts expire and roll over.
What about liquidity, though? Surely having more ways to trade XRP is positive.
Absolutely. Increased liquidity is the silver lining here. More institutional participation means deeper markets and potentially less slippage during large trades. That's healthy for the XRP ecosystem long term.
I'm curious about this leveraged version you mentioned. Wouldn't that just amplify the speculation aspect?
It would. A 2x leveraged XRP futures ETF is basically rocket fuel for traders. It could create some wild price swings. When the market moves up 5%, these products move 10%. But remember, leverage cuts both ways.
So in your view, is this ETF more about legitimizing XRP or just creating another trading vehicle?
The trading vehicle is just the mechanism. The real story is legitimacy. 5 years ago, the idea of XRP having a regulated futures ETF on NASDAQ would have seemed far-fetched. Now it's reality. That psychological shift in how XRP is perceived by traditional finance is the true game changer here.
Let's pivot to what I find puzzling. Despite this ETF news, XRP was stuck around 2.40 to 2.43 before the tariff news. Some outlets even reported a 3% dip, while others saw a minor gain. Why the sluggishness?
It is puzzling at first glance. You'd expect a price pop after such news, but XRP's resistance around $2.50 is proving tough to crack. There are a few factors at play here.
Let's break that down. What's holding it back?
For starters, XRP has underperformed relative to other altcoins during this bull cycle. Bitcoin has soared past 111,000 and Ethereum's hitting new highs, at least recent highs. Meanwhile, XRP's momentum is being muted, possibly due to lingering legal uncertainties or just broader market skepticism.
You mean the SEC's shadow still looms?
Exactly. Even though Ripple scored some partial victories in court, the legal clarity isn't 100% there. That's enough to keep some institutions and retail investors on the sidelines.
So is XRP undervalued at this point, or is the market telling us something?
It's a bit of both. Technically, yes, it might be undervalued if we assume bullish catalysts play out, but markets are forward-looking. If XRP isn't attracting major volume despite these milestones, the market might be signaling doubt about its long-term competitiveness.
That's interesting. Do you think there's also a psychological component where longtime XRP holders have different price expectations?
Absolutely. Many XRP investors who've held through the SEC lawsuit have price targets based on pre-case valuations adjusted for the bull market. When those expectations aren't met, you get this strange situation where positive news doesn't move the needle much.
Let's zoom out and look at something that flew under the radar a bit. Schumann Financial launching their euro-backed stablecoin, EURØP, on the XRP Ledger. What's the significance of this?
It's a big strategic win for Ripple. The stablecoin is MiCA compliant, which is key for operating in Europe under the new crypto regulations, and it's built directly on XRPL, which has processed over 3.3 billion transactions to date. That adds legitimacy and real-world usage.
So what does this do for XRPL's institutional appeal?
Tons. It makes XRPL far more attractive to European financial institutions looking for compliance and scalability. Stablecoins like this serve as a crucial piece in Ripple's broader cross-border payment vision. Think instant settlement, minimal fees, regulatory clarity.
Do you think this will attract more European banks to XRPL?
Absolutely, especially as the Eurozone looks for reliable digital payment infrastructure. XRP's Ledger being the foundation for that gives it a strong position. We're not just talking speculative value here, we're talking utility.
So is XRPL becoming a global hub for stablecoins?
It's certainly positioning itself that way. Between this new stablecoin on the XRP Ledger and existing stablecoin integrations, Ripple is nudging XRPL into a core infrastructure role in the crypto finance hybrid world. And if XRPL thrives, XRP benefits by extension.
All right, Nick, let's look forward. June could be a make-or-break month for XRP. What are the big events we should be watching?
There are three main ones. First, we might finally get clarity on a potential spot XRP ETF go ahead from the SEC. That would be monumental, way bigger than the Futures ETF in terms of direct market impact.
A spot ETF would mean actual XRP purchases, right?
Exactly. Futures are derivative-based. A spot ETF requires the fund to hold real XRP, which can significantly drive up demand and potentially create a supply shock in the market.
And what else is happening in June?
The XRPL APEX event in Singapore from June 10th to 12th. It's Ripple's flagship gathering. Think big announcements, potential new partnerships, or even protocol upgrades. Last year's event gave us some major developments, so expectations are high.
And what about number 3?
Federal Reserve rate decisions. Macro factors can't be ignored. If the Fed signals rate cuts, that's generally bullish for risk assets like crypto. Conversely, a more hawkish tone could spook markets and send everything tumbling again, regardless of XRP's specific developments.
So of these 3, which catalyst has the most potential to trigger an XRP rally?
If I had to pick one, the spot ETF ruling. That's the silver bullet. It would not only validate XRP in regulatory eyes, but also provide a direct on-ramp for institutional inflows. The APEX event and macro factors help, but nothing moves markets like fresh capital and regulatory green lights.
So Nick, bottom line, are we standing at the edge of a major XRP breakout, or is this just more hype?
We're at a crossroads. XRP's got the infrastructure, the institutional interest, and a roadmap. But it needs a spark, whether that's regulatory clarity, a major partnership, or just market sentiment catching up. The fundamentals are there, but timing in crypto is everything.
Well, June should be telling, and we'll be here to break it all down. That's it for today's deep dive. Thanks for tuning in.
Thanks everyone, and don't forget to like, subscribe, and hit that notification bell to stay updated on all our analysis. Your comments really help us shape future episodes too.
Absolutely. We'll see you next time with another crypto deep dive. Stay safe in these volatile markets.
Until next time, stay curious and trade wisely.